Everyone, for market minutes today, we're going to look at FUBO. I saw that it was trending today. I don't really know why, so I guess we could start there. Why was FUBO trending today? Let's see. Reverse stock split. Okay. So that's why they had a reverse stock split. Never a great thing. Um, yeah, no one likes to see that, but that's what happened. Just kind of some financial engineering. So that is why I was trending today. What we'll do is look at the financials of it now. And this is as of February. So we can see here that they have this weird. Can you file normally? Yeah, here we go. Okay, so most of the revenue comes from whatever this related party is. And some advertising, but I'd love to see what that is. Whatever it is, it went up. And apparently subscriptions is a new thing because they didn't get any of that. Subscriptions and advertising are new because it did not have that as of the end of 2024. Okay. So subscriber related expenses, this doubled. Then the related party, it looks like it went down about 20-30%. And then there's a whole bunch of, there's G&A, technology, sales and marketing went up quite a bit. And so did the subscriber related expenses, whatever that is. So you never want to see this when their total revenue, sure, it went up by about 400K, but their operating expenses also went up by about 400K. So that's not great to see. Not completely, because you have a slight improved operating loss, but that's, I don't love to see that. And then you got your net loss here. So they're burning about 20 million every quarter, or at least if quarters like this continue to happen. So next, I don't usually pay too much to the balance sheet unless you're looking at a potentially distressed company that's burning cash, which this one may or may not, which, well, this one is, it's burning cash. So let's see, cash and cash equivalents, they have a lot. Okay, so they're not at risk of, well, we'll check the debt here, but they're not at risk of having to raise capital or do debt anytime soon, because that's a pretty big cash runway. Though, let's look at this. Okay, so long-term borrowings is low, convertible notes, which this is technically debt, but it can be converted into equity. So I'm not too concerned about that. It just is dilution for the stock if they do convert it to equity, which they will. So it's either getting converted to equity or it's going to end up being debt. So pick your poison there. And then that's kind of their situation. Let's look at the valuation here real quick. Has a very low PE ratio, which is surprising to me because I didn't think they were even making money. Did I read this wrong? Yeah, I don't understand why they even have a positive PE ratio, so I don't know what that's about. But the market cap is 1.43 billion. So, kind of interesting why it's trending. There's certain. I don't know if this is still a case, but there's a stock is SMX, total crap company, but it had a big run, mainly because it had recently reverse split. The number of shares got greatly reduced, and then it's easier to financially engineer, manipulate, short squeeze, whatever, stocks like that. So maybe something like that happens with FUBO, who knows. But if you're looking at it fundamentally, for me at least, I can't say that I would be interested in this. Just based off of one thing alone, seeing the revenue growing is great, but then seeing the operating expenses basically grow right alongside it for me is kind of a big no for me. But hey, if you're in this, I hope it goes up. I hope it goes up for you. There's like I said, the reverse split play maybe you could do. They are still making 1.5 billion in revenue. That's nothing to flinch at. And it's not like you're buying this. I mean, this chart is something, but it's not like you're buying this at a super elevated price. So you're reducing risk there at least. So yeah, I know there's